Well, we got a tug of war happening in the markets. The question, which side are you on? Time for a little insight and action. Let me show you specifically what we're talking about. Main Street's tug of war. Consumers on the one hand versus companies on the other. Consumers, some of the data we got this morning, look at this, confidence at a 5-month high. That's a positive. The change in home prices at a 7-year high. Home prices pop month over month about 9%. That's certainly positive. So that's the good news. Meanwhile, look what's happening for companies. Sales growth actually negative. It's negative growth by about 0.8%. And business activity, not surprisingly, at a 3-year low. So Main Street's tug of war, consumers versus companies. What about Wall Street's tug of war, stocks versus data? And by stocks, we mean the S&P 500 up about 11.3% so far this year. On the other hand, if you take all the data we were just talking about, Citi adds all that up day after day. If it's a positive, they add to the number. If it's a negative, they subtract it. That's called the Citi Surprise Index. It's negative. It's negative 5.3 right now. As a matter of fact, we can show you what that looks like over time. Real simple. The white line is the Citi Surprise Index, and then in yellow, I've showed the S&P 500. So it's not a perfect relationship, as you can see, but look at what happens. When the Citi Surprise Index goes down, stocks go down. 1, 2, 3, 4, and yet look at where we are right here, the Citi Surprise Index versus stocks. Obviously, there's a discrepancy. The surprise index is down here, stocks are up here. Something's got to give. Tug of war. Which side are you on, Sarah?